Welcome to this Insights video. I'm Julia Lee, an equity strategist at Bell Direct, and today we'll be discussing investing in alternatives. It's my great pleasure to be joined by Clint Abraham, a portfolio specialist at Morningstar, to talk about the Multi-Asset Real Return Fund. This fund is available through mFunds on our website. Thanks, Clint, for joining me. Can I start by asking you to tell us a little bit about your fund and where you're invested?
Hi Julia. The Morningstar Multi-Asset Real Return Fund leverages Morningstar's global expertise in asset allocation and portfolio construction. The fund itself has an investment objective of inflation plus 4% over rolling 7-year periods, and it's unconstrained. That means it can be 0 to 100% invested in growth assets like Australian shares, international shares, listed property, listed infrastructure, or it can be 0 to 100% invested in more defensive assets like cash and bonds. And that's really important right now because we think a lot of equity markets and bond markets are quite overvalued.
Okay, so how would it fit in from an asset allocation point of view?
So one of the ways to think about the Multi-Asset Real Return Fund is as a portfolio diversifier. And the reason that we say that is because our approach is really quite different to others in the market, and because this fund has the full flexibility to invest when and where it makes sense to do so, we'd expect the returns from the fund to be quite different to traditional equity and bond returns.
So that makes me curious. How are you currently invested, and more importantly, why?
So the fund is defensively positioned and was actually defensively positioned leading into the weakness that we saw at the final part of 2018. And it held up very well. It did as we expected to do, which is help preserve capital in overvalued markets. Where we're positioned now is about 55% invested in growth assets, but it's probably not where you might expect it to be. We think that the US equity market and the Australian market are both quite overvalued. So where we are invested are in assets like emerging market shares, which have been under pressure lately given the ongoing trade war negotiations, UK shares and European shares, which are obviously facing the looming deadline of Brexit. And we also have allocations to traditional alternative strategies in the portfolio, things like hedge fund managers and long-short managers, which we expect again to help preserve capital and diversify from other parts of your portfolio. The fund's actually holding quite a bit of cash at the moment. We expect that to do two things. The first is to buffer the portfolio if we see any ongoing volatility. And the second is if we do see some volatility and some assets become more attractively priced, well, we've got the cash in our wallet to go and buy those assets that come on sale.
So on that, Clint, where do you see the current opportunities, and why do you think investors should look at this fund?
It remains a pretty challenging investment environment in our view. We think a number of share and bond markets are quite expensive, and with that comes the elevated risk of loss. So we need to be cautiously positioned, but one of the advantages of the fund is because it does have this flexibility to invest when and where it makes sense to do so. We can really isolate and get quite granular on the investment opportunities that we want to take advantage of. And because the fund has ample cash at the moment, we can move quickly to take advantage of those opportunities as they emerge.
Thank you so much, Clint.
Thanks for having me.
That was Clint Abraham, a portfolio specialist at Morningstar, talking about the Multi-Asset Real Return Fund. If you're interested in this fund, it is available through mFunds on our website.